Mfrs 8 operating segments can be defined as a component of an entity that engages in business activities from which can earn revenue and incur expenses. The segments are reviewed by the Chief Operating Decision Maker, also known as CODM, to make strategic decisions and allocate resources. The standard improves transparency by showing users how different parts of a company perform, including key information like segment revenue, profit or loss, and assets where relevant. According to Irish Auditing and Accounting Supervisory Authority, also known as IAASA, Chief of Decision Making, CODM, identifies a function, not necessarily a manager with a specific title. That function is to allocate resources to and assess the performance of the operating segments of an entity, often a senior executive responsible for analyzing information, evaluating risk, and choosing the best course of action. This role involves setting priorities, guiding strategy, and ensuring decisions align with the organization's goals. A CODM typically relies on data, experience, and input from different departments to make informed and effective decisions, especially in complex or high-stakes situations. As for IGM Corporation, the operating committee has been identified as the CODM. The first person is Datuk Lee Chun Fai. He is a Group Chief Executive Officer and Managing Director. Next, Datuk Irtan Gimfu. He is an independent non-executive director. As for Gamuda Group, a civil engineer yang bahagia, Datuk Lin Yun Ling, is the CODM of the company.
There are two types of segmental reports used in financial reporting for IGM Corporation Berhad and Gamuda Berhad, which is operating segment and geographical segment. Firstly, operating segment are defined under MFRS 8, where it is a component of a company that engages in business activities so it can earn revenue and incurs expenses and whose results are reviewed by the top management for decision making. This approach is known as the management approach, meaning that segments are based on how the business is internally managed. For IGM Corporation Berhad, we can see from the segment report that have a column for construction, property development, manufacturing and quarrying, infrastructure and investment. For Gamuda Berhad, the segments are also reflect operating segments such as engineering and constructions and property development and club operations. These segments are clearly divided based on business activities, showing that IGM use operating segments to evaluate performance and allocate resources. Next, geographical segments are based on location of operations or customers. This type of reporting shows how a company performs in different regions. For IGM Corporation Berhad, the revenue discloses revenue and non-current assets by location including Malaysia, India, United Kingdom and other countries. For Gamuda Berhad, the geographical information shows in several locations such as Malaysia, Australia, Vietnam, Singapore, Taiwan and United Kingdom. This demonstrates geographical segments is used in the financial reporting for both companies, helping users to understand the company's exposure to different markets. In conclusion, now we can see that operating segments focus on internal business activities and management reporting, while geographical segments focus on different locations or regions of customers and assets.
These are the snippets provided for operating segment and geographical segment.
Next, we move on to the two benefits of segmental reporting for financial statement users. According to MFRS 8 operating segment, companies are required to disclose segmental information so that users can better understand their business activities and the economic environment in which they operate. Firstly, one of the key benefits of segmental reporting is that it helps users better understand information and evaluate performance. Segmental reporting allows users to see which part of the business is performing well. For example, in Gamuda Berhad, the total revenue from the engineering and construction segment amounting to 13 million ringgit is higher than the revenue from the property development and club operation segment, which is 3.8 million ringgit. This indicates that the engineering and construction segment is the main contributor to the company's performance. Secondly, segmental reporting also helps financial statement users to assess future cash flows and make better decisions. This is because segmental information shows the performance of each business segment, allowing users to predict which segment to generate stable or higher cash flows in the future. For instance, in the case of IGM Berhad, since the construction segment shows higher revenue than other segments, construction segment is likely to generate higher future cash flows compared to others. Therefore, investors can make better decisions by focusing on the construction segments since it is more profitable and stable.
Mfrs 134 is to prescribe the minimum content of an interim financial report and to prescribe the principle for recognition and measurement in complete or condensed financial statement for an interim period. Timely and reliable interim financial reporting improves the ability of investors, creditors, and others to understand an entity's capacity to generate earnings and cash flow and its financial condition and liquidity. For Gamuda Berhad, the first event is award of new major contracts and projects. One significant event that occurred after the end of the last annual reporting period is the award of several major construction contracts. During the current quarter, the group secured new projects in Malaysia, Taiwan, and Australia with a total of value of approximately 6.7 billion ringgit. This event contributed to a strong increase in the company's performance, where total revenue rose by 47% and net profit increased by 5% compared to the previous corresponding period. The increase is mainly driven by higher construction activities supported by the growing order book. In terms of financial position, the new contracts strengthen the company's order book and future asset base. In terms of financial performance, it improves revenue, generation and profitability, indicating positive growth and prospect. The second event is completion of Vietnam's Seladan City project. Another significant event affecting the company's performance is the completion of the Seladan City project in Vietnam. As a result of this completion, overseas property earnings decreased by 54% from 70,710 ringgit to 32,607 ringgit. This event negatively impacts the company's financial performance as the completion of the project reduces ongoing revenue and profit contribution from the overseas property segment. Additionally, when compared to the immediate preceding quarter, total earnings decreased by 25%, partly due to the completion of this project. In terms of financial position, the completion may reduce project-related assets and future income streams, leading to lower contribution from property developments. For IJM Corporation, two significant events that affect the entity's financial performance are the increase in revenue and the growth in net profit during the financial year. Firstly, the group recorded a significant increase in revenue of approximately 30%, rising from 4.57 billion ringgit in the previous financial year to 5.92 billion ringgit in the current financial year. This increase indicates strong operational performance and higher business activities, particularly in its core segments. As a result, the group's financial performance has improved due to higher income generation. Secondly, the group's net profit increased substantially by approximately 214% from 211.6 million ringgit in the previous year to Rm 665.2 million ringgit in the current year. This remarkable growth reflects improved efficiency, better cost management, and stronger revenue contribution. The significant increase in profitability enhanced the group's overall financial position and indicates its ability to generate higher returns.
Moving on, I'm going to explain about IJM Berhad and Gamuda Berhad's interim reporting period. Based on each of the company's interim report, IJM Berhad's financial year ends on 31st March, while Gamuda Berhad's financial year ends on 31st July. The period for the current and comparative period of each statement were prepared by the companies according to Mfrs 134 interim financial reporting. For the interim period as shown, IJM Berhad and Gamuda Berhad's interim report were prepared quarterly, which is recorded for every 3 months. For current period, IJM Berhad prepared their financial statements starting from 1st of April to 30th of June 2024 for the first quarter. For comparative period, IJM Berhad prepared their financial statements starting from 1st of April to 30th of June 2023 for the first quarter. In the case of Gamuda Berhad, for the current period, the company prepared their financial statements starting from 1st of August to 31st of October 2024 for the first quarter. For comparative period, Gamuda Berhad prepared their financial statements starting from 1st of August to 31st of October 2023 for the first quarter.